The eastern horizon of Baghdad was pale gold, the sky just easing into day. In the alleys off Al-Mutanabi Street, lime green awnings of currency exchange shops stirred. Traders unrolled carpets of dinar banknotes, counted stacks in the damp early light, the scent of strong coffee that mixed with exhaust and diesel. Birds perched on telegraph wires, chirping as if to herald not just sunrise, but change. Across the Tigris, the domes and minarets cast in silhouette. The city, still recovering from nights of restlessness, bristled with expectation. On televisions, in kiosks, an official statement from the Central Bank of Iraq, a CBI, was due any minute. Everyone, shopkeepers, foreign investors, news correspondents, money changers, watched. The official rate of the IQD to USD hovered around 304.40 IQD per USD in interbank markets, according to Trading Economics. Trading Economics in local markets. Some shops offered slightly higher rates. A thin premium of uncertainty. The mid-market, more stable, reflected the CBI's implicit support. But in the back rooms of exchange houses, in whispered phone calls, speculation was running hot. For weeks, rumors had circulated. The government was planning to open 160 exchange centers nationwide to handle IQD and Vietnamese Dong VND trades. Why VND? Why now? The whispers claimed this was part of a broader push to deepen currency liquidity, to respond to diaspora remittances, to shift away from dollar dependency, perhaps even to pave the way for new bilateral trade with Southeast Asia. At 6:30 a.m., the press release hit yes, CBI confirmed, with caveats that 160 state licensed exchange centers will open across the country by the end of this week. These centers will handle official transactions in IQD and VDEMs for those importing goods from Vietnam or transferring remittances under strict oversight, tight dollar reserves. Inside the CBI headquarters in the glass and concrete tower near the green zone, Ali Mohsen Al-Alaq stood before a row of microphones, his suit crisp, voice steady, but eyes alert. These new centers, he said, meant to increase transparency, reduce illegal FX margins, ensure that Iraqi citizens have access to foreign currencies in regulated ways. He spoke of curbing black market distortions and strengthening reserves, echoing language from recent CBI reports that noted a shrinkage in the supply of issued currency, one factor contributing to slower inflation. Business News plus the one outside in markets like Kark, Babal, Sharkey, and Sadr City, money changers listened to the broadcast over boisterous tea shops. Some smiled. A chance to legitimize business previously done off books. Others frowned. Will state centers crush their margins? Will licensing and tax burdens bite? North, in Erbil, people checked windfalls. Traders in import-export noted that the Vietnamese Dong pairing was strange but telling. Vietnam has become an exporter of textiles, electronics, and parts to Iraq, especially via informal channels. If remittances from Southeast Asia connected better, there could be gains, cheaper imports, more competition, and perhaps new currency corridors. But even as optimism rose, tension simmered. Oil income remains the anchor. Recent months have seen oil prices oscillating under global pressures. Chinese demand weaker. EU sanctions affecting shipping. OPEC agreements tightening. The price per barrel remains volatile. Any drop hits the CBI's ability to buy foreign reserves, especially dollars, which are needed to back import bills, pay state salaries, maintain dollar-linked obligations. Inflation modest, but still a worry. Data for 2025 per Focus Economics, CPI inflation at around 2.63% year on year. Focus Economics, that's not runaway, but given public expectations, fooltricity, any disruption in exchange rates Unavailability of imports could spark sharp pain. Inside one of the state licensed exchange centers being prepared in Baghdad, Ms. Hana al-Rashid, a manager overseeing renovations, paced between counters. She oversaw new digital screens, cameras, secure safes. Her team rehearsed drills how to verify documents, how to report suspicious flows, how to manage cash shortages. "We must be ready," she whispered, "if the people trust us." Meanwhile, foreign investors watched. Glass-skinned investment firm in downtown Baghdad overlooking the Tigris, Mr. Paul Huang, a consultant from Singapore, peered at spreadsheets. He had been exploring opportunities in infrastructure contracts, supply chain imports from Vietnam, steel and consumer electronics. The announcement of VND handling intrigued him, cheaper payment routes, less dollar exposure. But he was cautious. "It's a signal," he said. "Signals without follow through are like mirages." In the alleys, ordinary citizens queued at ATMs, counting their pay, hoping their salaries, often paid in IQD, would preserve value. Shopkeepers adjusted prices daily. Some raised them in dollars for import goods. Some tried to hedge by buying foreign currency when possible. There was anxiety, holiday season coming, but many relied on imports for essentials. As sun climbed higher, the formal opening of one state licensed center in Tahrir Square proceeded. A modest inauguration ribbon, a few officials, police, TV cameras. Citizens watching nearby asked, "Will this mean I get a fair rate when changing dollars? Or does it mean more bureaucracy?" The contrast, the old Vez knew, was stark. Old money changers in cramped stores, stacks of cash, bills pinned to walls, new centers with clean counters, ID checks, digital ledger books, regulation. Drama of transition was in the air. By midday, unofficial rates in black markets edged up slightly, some shops quoting 320 ID per USD, adding small premiums for urgent access. The CBI's official wording tried to clamp down. Only licensed centers now allowed to handle USD, QD, and VND exchanges above certain thresholds. But enforcement in Baghdad, where every street has 5 to 10 unlicensed changers, would be the test. As afternoon shadows lengthened, oil tankers docked at Basra, carrying crude sold for dollars. Each barrel sold adds to central reserves, or should. Foreign pressure, complicated matters, banking channels to clear dollar flows are under scrutiny by U.S. regulators. Cross-border flows are watched for laundering risk with Iran and Syria. The government assures compliance, but some banks report delays. Back at CBI, Alec met with economists and financial analysts in his office, among them Dr. Layla Haddad, an Iraq-based macroeconomist, skeptical but hopeful. The 160 center plan could reduce spreads, she noted, but unless reserves are sufficient, unless procurement and import pressures are managed, inflation expectations are anchored, we risk a surge in parallel dollar rates again. Another voice, Mr. Karim Abadi, a veteran money changer who has seen many reforms promised and then delayed. They will try to control the dollar in formal channels. He said, but demand doesn't just disappear when people want dollars. Importers, shopkeepers, citizens, they'll find them somewhere. The risk is some people lose out. Rates jump in the informal market. By dusk, Baghdad's city lights flickered on. The central bank's statements circulated again on TVs and social media. Telegram channels filled with speculation. Will this mean IQD revaluation? Will VND train up to use instead of USD and import contracts? Is this step the beginning of a dual currency trade policy? Yet beneath hopes lurked fear. What if foreign oil revenues drop? What if the US dollar tightens across global markets? What if political instability disrupts policy continuity? At midnight, as petrol generators hummed and nighttime sellers packed up, the city slept, but not peacefully. In the lapses of sleep, people worried about tomorrow's rate, tomorrow's food price, tomorrow's wages. Morning again, though Baghdad woke more sharply this time. The existence of 160 exchange centers was no longer rumor, opening across governorates. Baghdad, Basra, Erbil, Najaf, Mosul, Kirkuk, Duhok, and others. Each center had to be licensed, connected in a network via CBI, subject to audits, security checks, with mandatory minimum reserves and required cooperation with customs and trade ministries. The state rollout schedule was staggered. 140 centers go live, the remaining 120 over the next 4 days. Each major city will have several rural towns fewer. The emphasis, places with heavy import-export traffic and places where remittances from abroad are significant. By midday, the USD IQD rate in regular license centers was enshrined by the CBI at 1,300 IQD per USD for buy orders from customers, 1,320 for sell orders. These are examples. Official published rates, actual interbank remains close at 1,304.48. Trading economics, this spread 20 dinars was small compared to some black market rates, which had been as high as 1,350 or even 1,400 in urgent transactions. The Vietnamese Dong of VND pairing was introduced. The official centers will buy VND at rates set daily, aligned via USD or via DirectX with Vietnamese banks. The aim, allow importers who pay Vietnamese suppliers in VND or workers remitting from Vietnam to avoid multiple layers of conversion. It was a novelty. Past practice involved converting VND to USD to IQD, often with losses. Inside the Ministry of Oil in Baghdad, huge screens displayed oil price indices, Brent, TI, as well as Iraq's export volumes. For Iraq to meet its obligation in the state budget, it needed often USD inflows just to cover imported goods, food, medicine, machinery. Oil revenues had improved recently, but global demand, especially from China, was softer. Export volumes had been variable. Disruptions in Basra due to weather, shipping, OPEC quotas all contributed. The ministry's permanent secretary, Ms. Rasha al-Shimi, referenced in a meeting the need for stable Forex channels so importers can plan. Foreign investors listened. Mr. Huang, back from his Singapore office, now flew in virtually to meetings in Erbil and Baghdad. He noted that these exchange centers might reduce currency risk in procurement, pricing, and contracts. He also asked, what about capital controls? What about repatriation of profits? What about restrictions if dollar reserves drop? In response, CBI announced that while exchange centers will handle VND and USD, all large corporate or cross-border transactions beyond US 500 ZAOs and equivalent will still be subject to central bank approval reserve requirements. Sometimes bilateral agreement. They also announced tighter KYCs, know your customer, and AMLs, anti-money laundering checks. Economists push back as well. Dr. Layla Haddad pointed out that these reforms could work, but only if inflation expectations are anchored. Otherwise, might rush to hedge their IQD holdings into USD or VND, pushing informal demand skyward. We see two possible paths. She said, 1, stabilization via policy. 2, renewed dollarization if people lose confidence. In local change houses in Bab al-Sharqi, the mood was volatile. Some unofficial changers tried to undercut the new centers, offering slightly higher amounts for USD to lure clients. Others reduced business, lawful competition, and possible crackdowns. In Basra, in one of the 40 newly opened centers, Mr. Ahmed al-Najjar, branch manager, described the early queue Small business owners, citizens wanting to send relatives money abroad, some with VND in hand. He said, we'll have enough VND supply for now because some Vietnamese suppliers wrote letters of credit and brought their currency through formal trade channels. Our USD stock is tight because we must buy from the market or via interbank sources. The reserves are finite. The central bank's reserves, last reported, stand at some level that gives the government modest room. Not luxurious, but not desperate. Focus Economics estimates for 2025 show moderate external balances. Current account deficits have widened compared to recent years, but oil income continues to cushion. Focus Economics, inflation remains manageable. Upward pressure from import costs, energy, and fuel persists. Crucially, the CBI policy rate remains around 4.0% end of period as per recent forecasts. Focus Economics, this cost of money matters. If they raise rates, borrowing becomes more expensive, dampening demand. If they lower, inflation could accelerate. Major conflict arose midday when a coalition of private exchange houses filed a petition demanding that the government guarantee supply of USD so that state centers do not hog foreign currency, leaving private operators bereft. Feared aggressive procurement by state-centered institutions would drive up acquisition costs, then force them out or push clients back to the black market. At the same time, protests bubbled in some neighborhoods. Small shopkeepers and consumers reported that import goods, rice, sugar, medicine had already seen price rises even before full operations of the new centers. People questioned whether the reform would help them or whether they would pay more in transition. On an international level, pressure built. The IMF and World Bank monitors asked for transparency. How exactly will the CBI finance its USD stock? Will parts of government revenue, oil revenues, be used to subsidize rates? There be hidden transfers or quasi-fiscal operations in diplomatic cables. Envoys expressed concern foreign sovereign buyers of Iraqi oil want clarity. Some bilateral trade deals might get delayed if currency risk remains high. There was also chatter of how this move might affect Iraq's relationships with neighboring central banks, especially in countries where USD exposure is also a concern. Begin to negotiate direct trade in VND or other currencies bypassing USD intermediaries? Could other currencies, euro, UN, Turkish lira, get included in future exchange center mandates? Some analysts think yes. By afternoon, unofficial USD IQD rates in black market stalls dropped modestly. 350 to about 335 in some areas, others held firm, banking on scarcity. Yet in official centers, lines grew. People bearing passports, trade licensors, remitters with letters, receipts. The government also launched a public awareness campaigns like posters, radio, TV, social media to explain how to use the new exchange centers, what documentation is needed to warn about scams, a long-standing issue in IQD trading. Citizens were encouraged to use licensed centers for their security, but some remained distrustful, recalling past promises unfulfilled. That night, Governor Al-Alak met his inner circle. Data from day one were mixed, decent footfall in cities, VND volumes modest, but non-zero. USD supply still tight in more remote areas. They projected a shortfall in USD in rural governorates. They tap into oil revenues more directly or negotiate lines of credit. A final report came in. Overnight interbank USDG IQ rate, a whisper figure, stood at Li1 3I4.4 AQD per USD with minor variance. Trading economics, the official retails spread in new centers, Subli1 300-132 was seen as a possible floor. But markets were watching, will supply constraints push that floor up? Before sleep, citizens worried, will our savings hold value? Will food prices rise again? Will this reform help or undercut us in fees and discomfort? Foreign analysts, watching in their offices around the world, saw both promise and peril. The government was pushing forward reforms at a risky moment. Global oil uncertainty, regional instability, domestic inflation pressures, trust deficits. If the 160 center plan worked, it could be a turning point. But if USD reserves faltered, demand overwhelmed capacity, or corruption leaked through, this could spur another spike in parallel rates.